He's on top of his game, though. I'll give him credit. He's really good.
Let's get ready to rumble!
Zinger Nation jam-packed show today. Peloton of 5%.
What's up, disciplined investor?
We got Benzinga CEO Jason Raznick here with us.
The man, the myth, the legend, Tom Nash.
Peter Schiff on the Power Hour with us live today. Interesting, different, unique, innovative companies. Mia, you are live with us on the Power Hour. What's up?
Thank you so much for inviting me on.
Jessica Billingsley, that is the CEO of Akerna, the best trade idea resource out there. Boom! What's up, everybody? Back at it after the close. This is not the Power Hour take 2. We already did that today. We did it at noon, so we do that every day at noon. So if you missed out, you can tune in tomorrow. But I do like that music. It gets me going. I was just saying to Ryan here, I'm a little bit tired today. I need to pump it back up, and that intro definitely does it for me. What's up, man?
Yeah,
How you doing today?
I'm doing well, man. As always, thank you so much for having me. That did really get me pumped up. It's been a little bit of a brutal kind of few weeks, but that music always gets me going. I liked it. And it got me all pumped up and ready to go and talk some stocks and probably pump some hope into the people that are out there, because this isn't doom and gloom town. We're going to get people going. This is a marathon.
There we go. Despite the bloodbath that we're all in, there are winners out there. We're going to try to pick them. And I guess, Ryan, for people who aren't familiar with you, again, this is a new show that we're trying out, trying to get more content going for Zinger Nation. That's what we hear. Everybody says, we need more. All right, we're trying to deliver. We delivered on the Kathy Wood interview yesterday, trying to deliver on more content. But Ryan, for people who aren't familiar with you, tell us a little bit about your style.
Sure. So I've been trading since 2017. I've been watching the market since 2012. I couldn't afford to trade. I was just a kid in high school, so I had no money. So I grew up from humble beginnings, watched the market, tried to learn as much as I could. 2017 landed my first internship, making $10 an hour. Started trading at that point, learning, losing, winning, and making some money along the way to pay for college and stuff. And then when I started working full time, I was able to use a lot of that money to trade and then pay for grad school. So I was able to get through grad school, thank God, debt free doing that. So I like to do, I follow a lot of momentum plays. I follow the sectors that are hot. And of course, I try to bring in as much technical as I can. Still, of course, with technical analysis, it's just like everything else. You're never fully learned everything, so I'm still trying to learn more and more as I can, and just having fun and enjoying the ride.
All right, there we go. So hot sectors. If you had to pick one hot sector, which is your favorite, which would it be?
So I think the biggest theme for 2021 would be probably cannabis, with this big Senate cannabis bill that's coming up. So the rumor is it should be the next bill that's coming down the pike after the stimulus bill goes through. They're pushing for it. It got hot when Chuck Schumer started talking about the idea of the bill and how much they want to do it. We saw Sundial go to 4, ACB went to 20, Tillery went wild. So I think very soon we should see cannabis cycling back in again. And I'm getting excited, and I'm getting ready to jump in there and make some gains off of those plays. And I think the weed sector is going to be doing really, really well throughout the year. Yeah,
I'm sort of with you there. I like the idea of getting into some of these cannabis names. I'm not in any right now, and I'm not going to lie, I don't totally know which ones I would get into. I just haven't done the due diligence on it yet. So maybe it's one of the ETFs that's interesting to me. But I'm with you. That's a good one. I see some folks in the chat doing the crypto shout out. I know a lot of money's been made in crypto. Bitcoin, I saw it hanging out right around that 50,000 level again today. So, maybe that's the market hedge. GameStop proving to be the true market hedge today.
That thing, right? Every time you think it's gone, it comes right back in. Every time
keeps running.
The markets are down, it's like, hey, let's run this one more time. All
right. So Ryan, I'm going to turn it over to you to get tactical here, talk some stocks in a second. But I do have to tell you one hilariously horrible story. And guys, smash that like button. Again, trying something new. We got Ryan here. To send him the feedback to powerhour@benzinga.com. You like it, you don't. Call him out in the chat. He's thick skin.
Yeah, man. Everyone loves feedback. That's the only way we can get better is feedback.
Yeah, but all right. Check this out. I bought a lot of GME, several hundred shares, on the day of the congressional hearing. Because I basically thought, all right, they're going to rally this thing as soon as Roy and Kitty start speaking. This is the last stand. They're going to run this thing up. Right? This is the day for GME. And then, that didn't happen. I took about a 20% loss and stopped out of shares 2 days before the stock ran to, what was that, 200? Before I had that run.
Yeah.
Like, shit. All right, 20% loss could have been a 300% gapper, but
Yeah.
all right, whatever. That's the way it goes. But all right, that was my story. Again, guys, I'm throwing it out there. Smash the like, share the stream. Ryan's about to take you through some ideas. And Ryan, I'll stop blabbering on. Take us away.
You got it, man. Thank you so much. All right, everyone. Welcome. I hope everyone that's watching has smashed the like button and subscribed already if you haven't. As Luke said, it's a great network. They had Kathy Wood on yesterday with a really, really great interview with Jason Raznick. That got me really pumped up for the market today. The market was a little bit not too friendly to us, but it gives me hope long term as someone who invests long term. So when I was thinking about what I would discuss first as we open the show today, I thought with everything going on, I wanted to share my experience as someone this isn't my very first red market. I was through the whole swan dive event that happened last March. I thought I'd share with you some things that I do to kind of cope with the market and kind of deal with what's going on so I can be mentally prepared and ready to get through this, because as a trader, these events tend to kind of shake out a lot of traders, especially new traders, because A, you either run out of capital, or B, you sell, you lose hope, and you never unfortunately come back. And the stock market, to me, it's something beautiful. It's a very, very powerful tool that can help liberate you and give you a lot of financial independence. So I thought that today I'd like to tell you like what I do. So first off, the thing is, on green days, that's not what makes you a great stock trader. A great stock trader, you can have green days. Anyone can make money on a green day. You can check out the play. You can come and make a few percent and kind of ride that out and make good money on a green day. But a red day is when your resilience is tested. It's when your DD is tested, and it's when your hope and kind of your fortitude is tested as a trader. So for example, on plays that I have in my stock swing account right now, that are kind of testing me. I've got my energy play CBAT, which is in there. I've done a lot of DD on that. I know we've got money coming into energy through the stimulus bill. There's money coming through a possible green deal that's coming moving forward. So that gives me hope. I've done my DD there. Or another play that I'm in, like DPW, I've done a ton of DD on that, and I believe in the stock, and it's got catalysts coming up. So if you do your DD on these plays, the moral of the story is, if you've done your DD and you trust your DD and everything makes sense, these companies have not fundamentally changed. The stock does not reflect the company all the time. When the market is red across the board, everyone is bleeding, everyone is hurting, your company is also going to take a hit through the stock price. So what does that mean? A, everyone's got, like as Spencer calls it, their uncle point. We discussed this a few streams back, where you set a stop loss, and that's the point where you kind of cut your play, you protect your capital, and I respect that. Everyone should have that uncle point set. Everyone should have that baseline ready to go. So when it hits that, you can pull your money out and you can walk away unscathed and ready to fight another day. Then you've got some plays where, like for me personally, with these plays that I'm in, I'll have between 20 to 30% dry powder, which is referred to, it's a slang term for cash in my reserves, ready to go to average down on these plays if events like this happen, if there's red days, to take advantage of when the catalyst hits and the stock goes up. So that's just two basic rules that I have. Rule number 3, this is the best one you can do, is just walk away from the terminal. First of all, never look at your long account on these days. It's called a long account for a reason. You set it there to forget about these plays as you move forward. They're in there for a few years down the line. 2, your swing account, again, if you've done your DD and you believe in it and it's there, and maybe you don't have the dry powder to average down, and you haven't hit your uncle point where it cuts and you have your stop loss and everything set, just walk away from it. Go watch Netflix. Come watch Benzinga. They've got almost 24-hour programming now for you to watch. You can come and watch and check all this stuff out and learn from here. So today I thought maybe we talk about some greener pastures. We take a look at SPY. We go over what's going on there. So I've got the screen share set up. So if producer, if you could just do me a favor and pull up the screen for me side by side so I can show the good people. So I'm taking a look at SPY here real quick. This is the daily chart for SPY. So as we see today, we closed the market at 371.88. So it's lower. We're coming down to test this 367, 368 kind of support that we have here. It's not very strong support because it's held for a while, but again, the big support layer that we were kind of watching and testing here was the 50 SMA, which is the 50 simple moving average. It's the average of the past 50 days, essentially, in this kind of correlated line here. Unfortunately, we broke the 21 MA, which is a very bullish sign. If you're above the 21 MA, that means your stock is doing very, very well. But SPY, which is the S&P 500, kind of broke that, and now we broke today the 50 MA. So a lot of people are saying, hey, is this what happened back in March? Are we going back into these levels again? Is it doom and gloom? Personally, I don't think so, but I want to prepare for the worst, but hope for the best. That's how I operate. So for an event like this, the next support layer that I'm watching here is, again, I'm looking at the lowest level this candle went, which is 368.27. I'll give it the 27 cents buffer and look at it for 368. Now, tomorrow is Friday. Fridays are notoriously red. People take profits for into the weekend, and they'll come back on Mondays to fight for a better and bigger day. So I think that tomorrow we might come and test this 368 support level. Or we can come back in, the SPY opens up and just keeps bouncing on the 370, on the 371.88 or 372 around that area and bouncing up and down. So if we look at the 1 minute chart, which is a reflection of every single one of these candles is 1 minute, we can see that SPY had a pretty difficult day. It opened up, here we go. It opened up around 9:30 a.m. We went up a little bit, your traditional bull trap that you have here. So like, for example, Monday earlier this week was a bull trap. Everyone thought the markets had recovered after 2 weeks of blood red. But unfortunately, Tuesday and onward, we came back down. Right here, you had a small little bull trap. So I tend to I don't buy stocks between 9:30 and 10:30 a.m. unless it's dipping really hard and the markets are stable. Again, not a financial advisor, but it came back up a little bit and then came down, and we tested the 378 support level. It bounced and went up, which was a good sign. We had the Powell talks happening around noon, so a little bit of hope came into the injection, into the equation. And then around noon, unfortunately, the Powell talks weren't taken very, very well. Jerome Powell spoke and he reassured the people that, hey, interest rates aren't going up. We're going to be injecting the economy with a lot of money. Again, long term, that's a problem, printing all that cash. But we found that there was a lot going on with that, and that wasn't taken very brightly. But we bounced off of 371.88, and then we started to come back down, and we closed the day. So again, tomorrow I'm expecting us to come down lower, going back to that daily chart, of coming back to that kind of the 368 point and hopefully bouncing off that. Again, this is me. I'm preparing for the worst, but hoping for the best, cautiously optimistic. So now, look, one thing we know is that starting tomorrow, I believe that they're starting to test and starting to kind of vote on the stimulus package, which injects the economy with $1.9 trillion, right? So what does that mean? A chunk of that money will be going into COVID testing. Okay, so what does that mean? That means that there's a certain types of companies and stocks that are out there. They're going to start to benefit from this. And now one stock that I've been looking at in particular, and I've actually played this stock a few times, and it's done pretty well for me. Again, not a financial advisor. Don't take this as stock advice. I'm just sharing you my thoughts. Is ADTX, ticker ADTX. This is the daily chart. As you can see, this stock does very well. When news hits, it ticks up and moves onward. So they do a lot of COVID rapid testing for antibodies. They have this ADTX score thing that they have. And this company has been waiting for emergency use authorization, which I believe comes with funding to be able to do their testing. And it's been in the pipeline for a while, and it's expected to be coming very, very soon. So now, how do you play a stock like this? So this is a low float stock. The float on this stock is low, which means that it moves faster and it moves quickly. So you want to be careful with these. This is where your after hours trading comes into play very well, where you can kind of set your limit order lower. So I'm going to kind of show you these. This is the 1 minute chart. So as you can see, the lowest point that the stock went to today. If I'm getting the hang of the Benzinga Pro tool here. By the way, this is the Benzinga Pro tool. If you guys aren't aware with it, it's like a very, very fast and awesome kind of tool that you can use for stock trading, stock ideas that come up. And it's a very, very great charting tool as well. So if you want to sign up, you can go to the Benzinga website and do that. But the lowest point that the stock came down to today was a candle wicked all the way down to a low of 273. And then we closed the day at 280. We're currently at 281. So the stock is moving. It's below the $3 support line that I had for it originally. And I believe that because this is a low float stock, right now it's playing with the support level. As you can see here, it broke this 295 and kind of wicked down, but it did bounce back up. I think that this will be a really, really cool stock to play as we go into the stimulus package. I was able to pick up some shares, and I have some dry powder ready to go to average down if need be, but this is one of those stocks that I'm starting to like and watching it. So you'll see that when you're in the stock market for a few years, you'll see things start to cycle. You'll see sectors start to cycle, and you'll have a notebook. Or now we have these fancy watch list tools, like Benzinga Pro has a watch list tool where you can actually make watch lists and keep your stocks in there, so you can start referring back to these once these sectors start cycling in. Like Luke was saying, cannabis, for example. So we all know the very, very famous cannabis stock is Sundial. So Sundial had a shelf offering for $1 billion, and they kind of used a chunk of it. So you can see like there's a lot of news and stuff coming out here. Personally, I haven't added Sundial yet because they have earnings on March 17th. Now, what does that mean? Earnings, traditionally, good or bad, recently, unfortunately, have been a deterrent for the stock price. The price comes down. So, for example, today we saw Costco had some pretty not so great earnings. They missed the estimate earnings, and the stock came down. Penny stocks traditionally don't do very, very well on earnings. So for me, what I'm going to do is I'm going to use that. I'm going to take advantage of that massive dip that happens during the earnings play. During the earnings day, when it comes down, and try to catch this. My personal entry for the stock price, let's figure it out together. Let's go through this together. So this is the daily chart. We've got the 200 SMA, the 50 SMA, and the 21 SMA. And we can see here the 50 SMA, which is at $1.04, is right now the current support where this stock is kind of riding. So you kind of want to watch that support level, because if you break that support level, your next support level, which also coincides with the actual candlestick support level, is your 200 moving average, which is 6 cents. So I do think that we will break that $1 support, and we saw it broken last week. And I believe, it was broken. Let me see. No, it wasn't broken last week. I apologize. It wasn't broken last week, but I do see it being broken sometime, either tomorrow or sometime next week, because as you saw here, the stock bounced off of 108. So that's a good sign. It's a bullish indicator that it bounced, but I do think as we go into those earnings that this stock will probably break that $1.04 support, and that'll be a good time for me to kind of jump in and buy this stock. Now, one thing to take into note is that this is an offering that's coming in. The offering will be diluting the stock. So this has a big float. I think this is a billion float stock. So the float will go even higher, which means that it'll take a lot more volume to move the stock. So we might not go back to seeing these massive highs where we saw the stock at almost $4. Maybe you'll get back to $2, $3, who knows? But again, it works with the momentum, the volume, and how the stock is being taken by the overall market. So that's just an example of how you can kind of try to find your areas of and see where you want to kind of add into the stock. So just a basic one, we went over Sundial for the cannabis play, and we went over ADTX for a COVID play that's coming around. So I'm just going to look through the chat real quick and see if I can answer any questions that are going through here, so we can kind of get a better idea of what people are looking at and what people want. So I'm seeing a lot of GME. We'll cover that really quickly. Crypto. So crypto, let's pull up my favorite crypto stock. If you follow me on Twitter, you've probably seen me talk about this a lot, is MARA, Marathon Digital Holdings, who got some really good news today. We heard from them. They're going to hit a 1.4 terahash hash rate, ETH/s rate, which is very good. Right now, the biggest one that's out there is Riot. They have one. Mara is going to be at 1.4 towards the end of March when they deploy all their new mining rigs that came in. They're installing the ones that came in February. They got a bunch more this month, and they're installing those as well. And they're set for, I believe, over 6,000 more coming in April, and as they go into the year, they will have over 100,000. So what does that go into my head? So I see it this way. Bitcoin is here. Tesla bought into Bitcoin. MicroStrategy bought into Bitcoin. A lot of different companies are buying into Bitcoin, and that's why you're starting to see a more stable support layer on Bitcoin, which is a good thing. It means that there's Bitcoin's kind of becoming something that's here to stay. I've been bullish on Bitcoin since I've been holding it since 2017. So I think that Bitcoin might be here to stay. So for me, my conviction kicks in, and I start researching into Bitcoin mining companies, as I like to call these shovel plays. So for example, for EV cars, shovel play would be a battery company, a EV charging station, stuff like that. These are commodities that will make money off of all of the other companies that are out there and part of this play. So what I did was I found Marathon Patent Group, and I've been watching them and playing them for a while, and they're actually a long hold for me. So I come here and I look at this chart and I take a look at and try to see and find some patterns here. We won't go too crazy with the technicals here. We got Neil for that in the mornings who does that. He's a lot better at it than I am. So you can see here the stock kind of fluctuates and the stock moves with Bitcoin's price. So if Bitcoin's having a great day, this stock goes up. If Bitcoin's not having a great day or a few days, this stock comes down. So you've got two opportunities. So our day trader friends love this stock, and I've seen a lot of my day trader friends talk about this stock because it's a gold mine. You can see this stock at a bottom of here. Let's just imagine you bought this at open. At open, this was $36. Let's say you didn't buy it at open. Let's hope you didn't buy it at open. You bought it at around the lowest level of $29, and it closed at $32. So you netted a good change of money. Let's say you just played with 1,000 shares. You made some decent money day trading it. But the way that I see this stock is going back to the basic support and resistance levels. It's holding above the 50 SMA, which is very, very good. It was holding the 21 simple moving average, but it started breaking that on the 23rd. That's when Bitcoin started getting a little bit more volatile. The market started getting a little bit more ugly. Bitcoin regained the 50K, the 47 to 48, 50K area. Mara started getting stronger and holding it. Today we had a bit of a lull. Bitcoin started getting a little bit finicky with us, but we got the good news towards the end of the day and we closed higher than our low point, which is pretty good. Again, it had a difficult day. And right now in after hours, doing pretty decent. It's at 32 still. So it's still a little bit under where it closed. But for me, this is a long-term play. How do I see this? Okay, so I look at this and I see Bitcoin I see Mara hit a high of 49.41. Cool. That's a great stock. That's a big difference from where we are now. It's an over $10 difference than where we are now. I see that Mara is expanding their operations. Marek Okamoto, the CEO of Mara, is brilliant. The team behind it, they've got Fred Thiel, I believe his name is part of the team. I've looked at their investor presentation. I've looked at their books. They recently did a $150 million investment into Bitcoin, which has net them about 83% at where the highs of Bitcoin was. So it's not as high as where it is usually, but it went up. So I see that this stock has a nice trajectory of where the company's going. They've got a good head on their shoulders. They're making moves. So for me, on a really, really red day like this, now again, this isn't financial advice, I look to try to catch this stock at lulls for a long-term play. What does that mean? I buy this stock, I monitor Bitcoin, I monitor what's going on, but I don't focus on it too much. So I'd look to catch it on these low points. So knowing Mara and playing Mara, if you can catch this thing under $30, it usually tends to recover if you're just a swing player. So you're 26, then it closed at 29. So even if you just played that, but it had a high of 40 that day, so you could have it opened high, but it started coming back, it came down low. But let's say you caught it in the middle of the day at a low of 27, and you kind of held it for 3 days, and the stock went to $40. So you made some good money there. So you can play this long term, you can play this as a swing, and it goes back to, again, that this is I call this a shovel and bucket play on Bitcoin. It moves with Bitcoin. Of course, you also have SOS that moves with Bitcoin. You have Riot that moves with Bitcoin. You've got now DPW that should be moving with Bitcoin when they start doing their mining operations. So that's kind of how, like when I was discussing with Luke earlier, how do you look for sectors? So when Bitcoin starts getting hot, I start looking at my watch list where I have all these stocks. And I pull these up. And of course, you've got I see a lot of people talking about it on Twitter and in the comments too. There's a lot of really good OTC plays for Bitcoin that you have, like Argo, which is one of my favorite ones. I don't have a position yet, but I do look to put it into a position for them eventually. But there's a lot of plays and you can start looking at them as well. So another great kind of shovel and a bucket and shovel player, whatever you want to call it, is we know that the Biden administration, again, not getting political here, this is just I'm taking all the news that is available to me and using it to my advantage to hopefully make money off of this. Again, you can make money in almost any situation. You just have to find the right keywords, the right tooling. So like, for example, before we go to that thing that I was going to discuss, I want to show you RVP. RVP is retractable technologies. They're a Syringe player. So a few months back when kind of the vaccine came out and the COVID vaccine rollout started, a lot of talk has always been buzzing for the past few months that we have a syringe shortage. So what does that mean to me? That means there's an opportunity. There's a company probably out there. So I started doing research on companies, and I found that Retractable Technologies, RVP, had gotten a contract previously around July from the government to produce syringes because we had a syringe shortage. I said, cool. I saw that the stock had peaked. when they had gotten it, which was around sometime here, if I'm not mistaken. Yep, July right there. It had peaked and done well. And the stock had, of course, lulled because it's a very, very low float with a lot of insider ownership and I believe 13% institutional ownership within this stock. So I said, okay, that's fine. Let's keep an eye on this as we get closer to an actual vaccine. So we saw these new vaccines being announced. So that's when a light bulb went off in my head a few months later and said, okay, we're getting close to a vaccine. As we saw, the vaccine was announced, I believe, on November 4th or 5th. So I started building a position around November 4th and 5th when vaccine talks started getting hot and we saw all those meetings happening. So I started buying some shares here and I wrote it up and I sold some because I knew this was a low float. Of course, low float to move a lot quicker, popped, sold some, started coming back down. Again, started accumulating more shares because I knew the syringe problem had not been solved. More syringe talks started happening in almost all of the White House press briefings. That was one thing that the press secretary always kept bringing up was that, hey, government contract, we need to kind of get more syringes. So of course that triggered a up run again, pop, played, sold it, sold off again. I didn't play it in this final one into January, which is when they got their contract. I missed out on it. I was busy playing other stocks during the craziness and the beautiful green month of January that we had. But right now I'm seeing another opportunity here. They just got a $54 million contract from the government for syringes. Earnings should be coming up very soon. And I think I want to play this one ride it up into earnings, not hold it through earnings, but play it up into earnings because the syringe problem is still a thing that I still keep hearing about all the time because it's not just COVID that we do vaccines for. We've got people who are on insulin, people who are getting the flu shot still, all the other practices that have vaccines and stuff we need syringes for. So I see that this right here, we have support again. It broke the 200 MA. Again, you cycle through the same steps again. It's not rocket science. You start cycling through the steps again. All right, we broke the 200 MA. Where's my next support level? So it's around about, again, the usual spot where you can catch it. It's around 12, 11, 10, 11, 12. You can catch it. Today, let's see, it came down to a low of 1177. So look, I missed that entry to buy it in, but I do believe that tomorrow the markets might go lower. So I'm going to wait and see if I can catch it there. But my golden opportunity will be if I can get it at the 200 SMA. So I think that around that point, that stock will do really, really good for me. So again, if there's any stocks that you guys want me to look at in the chat, you can throw them in there. I'll be more than happy to cover those. But I just want to do one more shovel and bucket play for it just to go through the analogy. So we know that EV cars are hot. Everyone's talking about CCIV. Everyone's talking about Fisker. All that stuff. Again, CCIV is the SPAC that's merging with Lucid Motors. So what I see this as, I know that a lot of countries around the world, especially in America and Europe, are talking about, hey, we want to have charging stations all over the place, and we want to discuss this. Before we do that, someone threw in the chat Palantir. Palantir is a very, very good stock. It's a stock that Kathy Wood also invested in. Again, if you haven't seen that interview with Jason Raznick and Kathy Wood from yesterday, please go and check that out. You're going to really, really want to check that out. She's one of the most brilliant investors that has ever walked this face of the earth. She's like the Warren Buffett of our generation. So Palantir is a stock that I was actually able to play on IPO. I bought it on IPO day. I held it and I kind of sold it on the run up. I did take a loss on it around here when I started losing some faith. But again, what happened was here, if we start looking at it here on this big run up that happened, and we had a big crash on around this time and it started moving. But I knew in the back of my head, Palantir was a company that I always wanted. So I kept it on a watch list. When it started coming back down here and started making moves around on these red days, I started kind of accumulating shares. I had a small base position. I always keep a small base position in companies that I like. I believe it was around a $13 average. I tweeted it. I said, hey, I'm buying these. I like to buy the fear and sell the FOMO. It's kind of like what Kathy Wood said yesterday. I started accumulating a position, and on these red days, I've been accumulating more and more positions. So Palantir is a big data-driven company. It's very hard to figure out what they do. I tried to do a kind of a DD video on them, but their investor presentation was very, very complicated. Just their books and financials were the easiest thing to look at. So here right now, we can see that Palantir is having a kind of a bit of a difficult time here. They're testing their support levels, which if we look here, they've got support at a low of 2250, and of course we've been testing that this week and it bounced. So people are looking at this. To me, Palantir is, again, it's one of those long-term stocks that you buy and you come and look at 6 months down the road. An example of a stock like this for me was Disney. In the March Madness that was last year in 2020, during that big swan dive event, I had some money, my dry powder. I threw it at Disney around the $90 point down here, and I didn't look at it because my convictions was this: it's Disney. They're a multimedia mogul company. They've got Disney Plus coming out. They've got all the Marvel movies. They've got all the Star Wars movies. Disney's going to be fine. And thankfully, my conviction came out true. And today, here we are, even on a bloody, bloody red day. It's still almost about $100 above the. It's $100 above about what I paid for it. Again, I average in, never buy in all your stock at once. Always dollar cost average in, because again, you've got red days. You don't want to always go too deep into your position and talk about that. We got stocks coming up on in the chat. Someone is saying SOAC, SOAC. So SOAC is a SPAC that is merging with Deep Green, which is they're hoping to set up a mineral mining in the deep sea. I have a position in SOAC. I like SOAC. I like them merging with them. Again, this is a SPAC, so right now you are near NAV. So SPACs open up and kind of start at $10. SPACs have been having a hard time. There's been a lot going on with SPACs. So we're going to try to see where the SPAC market moves altogether. And when SPY comes down, SPACs also come down. So SOAC is going to take a few years before their operations start going big. This would be, if you're in this stock and if you like this stock, this would be, again, I would aim for this long term rather than a short swing. It did start heating up on these pops. You saw SOAC because, of course, as rumors come in, we saw that with CCIB and Lucid, the stock does really well, and then people tend to sell the news. So this is for, if you'd like it, look into Deep Green, the company, who they're merging with, see what they're doing. I personally like it a lot. They've got one of the coolest promotional videos I've seen in a long time, so you can definitely look into them deeper. But again, with the SPAC, pre-merger, you can see the SPAC break $10. That is very, very true. Like, for example, here you can see the SPAC hit $9.70. But due to the PIPE investment and the investors that come in, it sets they aim to set a base level at $10. So the closer you can get a SPAC, if you believe in, again, it goes back to the very, very first thing we talked about. If you believe in your DD and you have conviction in your play and you're smart about it and you understand it and you want to be in this long-term or swing, or you have any sort of plan, you take advantage of a day like this where the SPAC is literally near NAV and it came down to a low of $9.96. So another stock that's coming through is we've got stock. So SOS, I actually talked about. I've talked a lot about SOS. The SOS has been dealing with a lot going on right now. SOS has become kind of one of those. It's either you love it or you hate it plays. I was in it. I played it on the uptick. A lot of news started coming out about it. And I made a deal with myself that if a stock becomes too big and too many people are talking about it, like it becomes another CCIV or something, I would exit the position. And there was some data and stuff that I saw in SEC filing that I wasn't comfortable with. So I exited the position. But again, I wish everyone luck who's in it, and we can take a look at this together. So SOS, again, a bullish indicator for me personally is the 21 moving average that we can see here. So this was above the 21 average, started coming down. We saw these two really beautiful green candles. These guys were dealing with a short report from Hindenburg, which kind of brought them down and kind of also brought in the attraction of the Wall Street community, the Reddit community, who wanted to kind of short squeeze Hindenburg out of this play. So this is, again, with any short squeeze play, just like GameStop, just like AMC, it's risky. You can get left holding the bag or you can make a lot of money. This is 100% up to you. SOS, they are beginning their Bitcoin mining operations. There's a lot of stigma around them out there. Please do your own research on this. It's a little bit more difficult with international companies because a lot of their documentation and stuff, yes, on the SEC, it's all in English, but on their website and stuff, it's in a different language. I believe it's either Cantonese or Mandarin. I'm not too sure. Again, I don't speak or read either of the languages. But again, please do your own DD. Don't buy a stock just because someone on Twitter is saying it. Don't sell a stock just because someone on Twitter is telling you to sell it. If you, again, have your own plan and roll with that. Let's take a look at, again, another stock is coming in as NNDM. NNDM is a beautiful, beautiful play that was, again, discussed by Kathy Wood and Jason yesterday in that interview. This is a stock that was also discussed this morning on the Getting Technical with Neil. This stock's building support at where we had previous resistance levels. So previous resistance levels for this stock, if we take a look here, was, for example, a high of $10 was a resistance level. You had a resistance level down here, which was around $7. So here we're testing against support around $7. So your former resistance level is now becoming your current support level, which is a good indicator. Now look, this stock has dealt with a lot. this stock is comically known for getting a lot of offerings. So this is a thing that everyone was kind of like, what is going on with NNDM? Why are they doing this? Why is Nano Dimensions doing a lot of this? Then an interview came out with the CEO who said that, hey, we've got $1.5 billion on the books. We're looking to make strategic acquisitions of companies who are in the same field or around the same field that we are. And we want to kind of go out there and kind of understand, kind of get a hold of these companies. We don't want to wait for when they're starting to become our competition. We've got all this money. We want to present to them. We don't want to pay all in cash. We want to go with shares and cash and kind of do strategic acquisitions. So again, my whole thing, I will always be transparent with you. I doubled my position in these folks yesterday. The Cathie Wood interview gave me even more conviction after seeing that interview with the CEO. So I liked it. I like this play a lot. Yes, it's heading into kind of a territory where, let me turn on some indicators so we can start looking at, for example, MACD here, which is kind of, I call this my fortune teller. I don't know why I have one open already. That's why. I forgot that I have all my other indicators minimized. So right now we're heading into kind of oversold territory. Right now it's under 30, so under 30 on the RSI, the relative strength index, means that the stock is entering oversold territory. And the MACD, to me, I'm seeing this should start curling back up as the markets pick up. But again, I'd watch it since we broke the 21 MA, we broke the 50 MA. Again, for me, this is a long play, so I threw powder at it, and I was like, all right, I'm not going to look at this for 10 years. It's the same thing I did when I bought the stock at $6. I bought it, again, not 10 years yet, but I bought it, and I just left it in there, and it did handsomely for me. So I think with this stock, again, is a long-term play if you're in it, or if the markets start picking up again, maybe you can swing it back up and onward. So let me pull up another stock for you folks, and let me do one that I'm not in, so it's not a little bit weird. DNN. So DNN, please. Thank you for being so kind and saying please. DNN is their uranium mining company. So let me just pull up the chart for you here. So DNN is doing pretty good, and all the craziness that's going on. Just looking at the kind of the daily chart, they held a 21 moving average. It bounced here, bounced here, bounced here. Yes, it broke it a little bit downward. Let's kind of average that up a little bit. And today it broke the 21 MA and closed at $1.06. Sorry, if you see me looking around, it's because I'm dealing with a webcam here and kind of still getting used to all the production stuff. So the 21 moving average. So I've been reading a lot about uranium. I personally have a position in UUUU, which is 4 U's. I think uranium is going to be a hot commodity this year. All the mineral plays should start getting hot. Again, that's another thing to start looking into cycling. For example, today, a company named Vale is announced finally after months. It's been rumored in the beginning of the summer when I bought into it that they're going to be working with Tesla to provide them with nickel. I haven't looked at that company in so long. I don't know too much of the details, so I don't want to kind of say anything that's wrong, but you can look into that for yourself. But uranium is going to be a hot play, in my opinion. You can look into it. It's a very, very complicated sector, but if anyone wants more information, I do have this little article that I really, really like, and I'll post it on my Twitter so you can check it out to read more about it. But to me, this is a strong chart. Again, it had a weak day today, but I don't let one day define a stock for me. We can see what happens tomorrow and take it from there. And if you're looking to add a position, maybe if we start seeing too many red candles, maybe look to see if it holds the 50 MA. And then again, let's hope this doesn't happen. You test the 200 MA and you kind of take it from there. So let me see, what else are people talking about? So NNDM we discussed. Open, please. Sure thing. We'll take a look at Open. Open was a SPAC that merged with IPOB. This was Chamath's. This is one of the Chamath SPACs. Chamath is kind of like one of those father of SPACs. I call Cathie Wood mother of SPACs because when she invests in a SPAC, it does really well. Cathie Wood's fund owns this one. I'm not sure which one. I believe it's ARK K owns this one, or ARK F. I'm not too sure, but we can definitely take quick, if you want, you can just quickly Google it and say like, hey, ARK K or ARK F, which fund owns this? They're very, very transparent about their owning and what they own and what they talk about. So this is a SPAC that's I was in IPOB. I'm currently not in the position anymore. With Chamath SPACs, I like to buy them when they IPO around $10 because they tend to be very, very good. Again, Clove has been having a little bit of trouble, which was IPOC. I've got an internal joke with my friends that Chamath bats 2 for 3 so far. But again, you have to look at these things long term. These are companies. These aren't, to me, SPACs are companies that you invest in long term. You can swing them and make money. As you can see here, you got a peak here that you could kind of rode up and sold, came back down, bought down here, sold up here. Again, you can play these SPACs very, very well. Right now, the market's not doing so hot. But if we just take a quick look at IPOB broke essentially kind of like this this line right here that we have, and it came down to a low of $23.28. Okay, I get it. Open Door, for those who don't know, it's kind of like a real estate company that kind of does a lot of real estate deals, similar to, again, I don't want to talk too much about it because I'm not 100% about it, but I would compare them to something like maybe a Rocket Mortgage or a United Wholesale Mortgage Company, but they're a little bit more advanced in that realm. They're more closer to Rocket than United Wholesale Mortgage, from my understanding. But again, today they broke the 50 MA. Again, today is a really, really red day with a lot of uncertainty. One day shouldn't define a stock, but you want to watch the trends and you want to watch that. And they don't have a 200 MA form because they haven't been IPO'd for 200. They haven't been on the market for 200 days. So what I can do here for you is I can adjust my inputs from a 200 MA. I don't think we've even been around for 100 days. Let me just typing blind here. So, okay, so we have somewhat of a 100 MA forming, so you can treat the 100 MA as a 200 MA right now. Just don't count it as a golden cross or anything like that. But right now, as you can see, it broke the 100 MA as well. So this is, again, this is for those, you have to do your DD on this one. You have to look into it, see if you like it, see if this is a play that has conviction for you, if it makes sense to have in your portfolio, again, and start dollar cost averaging in on the red days that you like it, and kind of play with it there and see if it makes sense for you. So let's look at another stock real quick. Okay, FRX. Let's take a look at FRX, and then I'll look at Genus as well. I will come back and look at Genus, and I have a story for Genus for you. So FRX is another SPAC that's merging with a company whose name I'm blanking on, but that's completely fine. They are a workout company. So this is my thesis on FRX. This is my same thesis that I have on Peloton. This is my same thesis that I have on a lot of these at-home plays, except Zoom. My thesis is this: the reason that people go to the gym is not because you need the equipment. Yes, there's a lot of people, especially in cities and areas, that need the equipment and go to the gym and work out. But something like Peloton or the company that's merging with FRX, these are mainly for people who work out at home. And yes, that market exists. We know Joe Biden owns a Peloton. But FRX, a lot of people were hyping this up and saying that this would be the next Peloton. I think that their subscription numbers are inflated due to COVID because gyms are closed. This company will be really tested around the time when the market starts opening up again and starts moving forward. Beachbody is the company, I believe. Thank you so much for whoever put that in the chat. G-Trades, I believe. So this is a company that I would, again, look at their financials for SPAC. The first thing you want to look at is don't look at all the beautiful images that they put for you in the beginning of the slideshow. Ignore all those. What I do is I always come down to the bottom of the section of that investor presentation for the SPAC. That's the beautiful thing about SPAC, is they give you an investor presentation. Look at their financials. See, when are they profitable? When will they be profitable? What is the breakdown of the deal? So, for example, there's a SPAC out there. I'm not going to say it because I don't want a bad name of SPAC, but 1/9 of the whole deal is going to pay off debt. To me, that comes off as, hey, we're going public because we need to cover this debt. And we know that through this PIPE investment, we can kind of pay off all this debt. And to me, that's like, I'm not a big fan. So see how much of the company's deal is going into debt and see how much money is going onto the books. So that's always a good thing. So, for example, there's a lot of companies in tech and stuff that a lot of the money will be going into their balance sheet for R&D, which is render and design. That's a good thing. That means you don't have to worry about offerings that you see a lot of penny stocks and some companies deal with. So let's take a look at this chart. This is a very virgin chart. It's been they came onto the market on January 15th, quickly released a deal that they're merging with Beachbody, spiked up all the way to $18.20. Again, a lot of hype was behind the stock, and I get it. The numbers looked cool. The subscription numbers were high, and then you started to see the lull come down, and right now it was a low of $10.50. Going back to SPACs, it was at NAV around $10, and it closed at $11.18. Again, this is just like Open, just like CCIV, just like any other stock, any other SPAC play that you have. If you have the conviction behind it, you want to stick to that play and kind of run with that play and work with that and kind of see where it goes. And someone's telling me it's an extremely low float for a SPAC too, which is good. Hey, that means it moves faster. Low float, the stock moves faster, upward and downward as well. As we can see here, in a matter of days, came back down to NAV. So let's see what other stocks. GNUS. Okay, Genius Brands International. Really quickly, I'm just going to Google something so I can understand this company a little bit better. So this is Genius Brands International. Yep, this is the cartoon channel company. I remember this one from last summer. This was one of those stocks last year where it was getting pumped heavy. Everyone loved this stock. Everyone thought that these guys were going to get a big contract with Disney, but unfortunately it ran up and came back down, and kind of I don't want to say forming a cup and handle because we're nowhere near close to that. But it's a stock that we're gonna take it on its merits. I haven't done much DD on them personally. At that time when everything was going on, I went out and bought Hasbro instead because I had a little more conviction in that play long term. And I was a little bit worried about the pump and dump plays that were going on. But this one right now, let's just take it at its word and see where we are. So you can see here, you have a golden cross that formed here. A golden cross is when the 50 SMA crosses the 200 SMA. So the 50 is above the 200. So I'm sorry, let me just make sure that, okay, so we're at the 100 here. I need to adjust my settings. That's one thing you want to make sure is that all of your settings are set up properly, and this tool has that. So again, as you see, I almost mistook that for a golden cross, when in reality, this is a death cross. A death cross is when the 200 MA crosses the 50 MA, and that's not a bullish signal, that's a bearish signal. That means the stock might be heading down. So as you can see here, the 200 is above the 50. So again, that didn't play out. Golden crosses don't always play out. Death crosses don't always play out. As you can see here, a death cross happened here. The stock came down, but again, woof, ripped all the way back up to a high of $3.06, and of course came back down and lulled, and has been lulling since. It broke the 21 MA. It looks like the 21 MA, and let me just double check. Yeah, I got 21.15.200. I got 20 on. That's why. I'm sorry. Let's do that one more time. One more time for the folks in the back. I'm so sorry. I'm still getting used to a lot of these tools. But as you can see here, right here, again, I'll show you an example. Right here, you have a death cross that actually played out. The stock came really down and kind of started testing an area of the $1 support area. The stock started recovering and doing a lot better. And we haven't seen a golden cross or a death cross since. Again, these indicators don't always happen. They're not always guaranteed. So this is a signal that I don't really personally like. This by me personally, I haven't really seen it in many books. 200 is above the 50, but under the 21 MA. That's usually not really good for me personally. But again, it looks like they had a really, really good day. I don't know what news was going on. It says GNS is trading higher after the company issued a CEO newsletter. Okay, so cool. So I guess there was new conviction that came into this stock, more confirmation that this is a stock that people like, or not people like, that the company believes will have a bright future. And the stock shot up and ripped through the 50 MA, the 200 MA, and the 21 MA, but of course lulled and closed at $1.80. Again, this is one where you have to sit down and do your DD. As you can see, this is a stock that's been known to get pumped, go up, and come back down. So I would say whoever's in this, do your DD, see if you believe in the stock, and see if it's good for you, and then take a position. But it's usually a good sign on a bloody red day where that this is green. But again, be careful for pump and dumps. Always do your own DD on a stock. Don't just buy it blindly. Even the best stock traders in the world can put out a stock and it can tank. So just please be careful. Let me see. Thank you for the chat. Again, the chat is a little bit different. I'm a little bit ahead of what you guys see in the chat. So thank you for who corrected me that it was a 20 MA. Let's take a look at one more. ZOM, please, and then SENS. Okay, sure, no problem. Let's pull up Zomedica. Zomedica. I like Zomedica better. It's got more flair to it. This is a stock that a lot of people have been talking about. I believe they're in the medical space, but for animals, if I understand it. I haven't done much in it. My buddy Min likes this stock a lot, and he bought it in the 90-cent area, and it looks like it's doing well for him. I've been telling him to take profits. I hope he's listening. Another tool, another little tip before we kind of go into this deeply. If a stock is running up like this, right? And you see you bought down here, like you bought in the 10-cent area here last in December and kind of December 2020. And then you saw these big spikes that happen. Take some profits. Look, the stock always lulls down and you can kind of average back in. Sure, you're averaging up, but again, you have house money now. You kind of, again, comes up here, you take some profits when it comes down. You take some profits up here when it comes down. Again, if you believe in the stock, you have conviction, you have DD, you buy the stock back up and you ride it back up again. So let's take a look at this. This is a good indicator. The 50, I call these Wolverines here, when the 200, the 50, and the 21 are kind of lined up like this. I call this the Wolverine. It's not in any textbook. This is just something that I call it personally, just for fun. I like the Marvel comics a lot. This stock, it broke the 21 MA. Very briefly on the 23rd of February. So, and then it bounced back up and it has been moving. So during this red market, I'm seeing green candles during a red market, which is good. The other thing that I'm seeing here is there's a lot of people that are holding this stock, which is good. And then you have volume that comes into this stock, which I imagine is due to news or something that happens. But a lot of people are holding this stock for pending bigger news, from my understanding from this chart. Again, it looks like it's a bio play, or not for humans, but for animals. But it's again, that medicine biosphere. So again, I would look into some DD and see what you can do with this stock, and if you like it, and you can start accumulating shares. But it looks like it's doing pretty well for a day like this. It did pretty well. Again, came down, but again, it was riding that 21 MA as support. But your 50 MA, you've got a lot of room. So again, I would look into DD for that one, and SENS. Let's look at that one real quick. Okay, so you got it looks like almost a parallel chart to ZOM. So it says they have Q4 earnings that are released today after market. I don't know if they came out or not. We can click this and we can see estimates. It says they were confirmed and they had revenue beat estimates, which is good. Congratulations, you beat estimates by 27%. That's good. But again, look into those earnings yourself. You can see in this tool you have a lot of. I'm not just plugging this tool, but you can see that there's a lot of different stuff that you can see about the stock here. So the Q4 earnings per estimate were 0.41, down from the 0.18 year over year. They beat their sales 3.9 million versus 3.05 million, which is cool. Sales were 12 to 15 million versus the estimates that were 13.15 million. So congratulations, it did really good on sales, did really good on revenue. Let's take a look at the chart. Let's see how the world reacted to this news, and let's see how they took it. So let's take a look. So again, it looks like it had a red day. Earnings, no matter how good they are or how good they're perceived to be, unfortunately can sometimes result in the stock coming down. And that's okay. That's completely fine. Again, goes back to your conviction. If you have the DD and it makes sense, these days shouldn't shake you. So here we came in, we tested the 50 MA, and it bounced off the 50 MA, which is great. And it looks like right now it's at $2.84 up, and just ticked up. I hope people didn't buy that because of this, but it ticked up right now, and it looks like it's doing good. It's been riding the 21 MA. It broke the 21 MA during the red chaos. That's been happening, but the 50 MA has been support. So again, I'd take a look at it. If you're new to the stock, do some DD. It's okay if you buy the stock a little bit more expensive. That's completely fine. That's the stock market. Don't get too greedy. Don't buy a stock just because you hear it's hot. Take a day or two. Worst case, you're paying like a few cents or 50 cents or $1 more, but you'll be able to sleep a lot better on days like this. Once you do your DD, you pay a little bit more for the stock after you do your DD and you buy in. But then you'll take it there. And again, if you average into the stock, like for example, if I hope no one bought it on this day when it was at a high of $5.56. You see a stock like this, you see these up wicks. Again, these are Heikin-Ashi candles that I'm using. You can see that someone definitely bought this stock at like $5, $5.10, $5.15, and the stock price came down. That's why, like during these lulls, you look to pick up shares and start dollar cost averaging in. You start taking profits on the way up, and that way you're completely fine. At a certain point, you could end up with like 1,000 free shares on house money from profits that you have, and you're just kind of letting the stock ride because you believe in the DD, and you kind of play it that way. So that's SCNS. Let me see if I can squeeze one more in. Yeah, guys, smash the like button if you haven't. Do me a solid. Smash the like button. Let's show the producers that you guys like this show. Let's take a look at BFLY. BFLY is a very powerful company, stock aside. BFLY has got kind of the handheld. Am I on the right stock? I guess I am. I'm on the right side. What a weird chart, but okay. BFLY, Butterfly Network, was a SPAC that merged with LGVW. Jonathan, I'm blanking on his last name, is the head of this company. He works on a lot of these different bio companies. He's also doing a second SPAC with a company called Kappa, which is kind of with Quantum Sci, which is another digital company that's working with, I believe, it's sort of in the genomics again. I don't want to tell you the wrong information. Do your own Googling, but the company's called Quantum Sci. He also has a third company called Hyperfine, which he's looking to SPAC as well. So a lot of people are fighting and trying to see what SPAC does, because his SPACs do traditionally well, and a lot of people can scalp them and make money. I hold them long term because there are a lot of plays that work out that are really good for the medical field. So like Hyperfine, for example, is I believe it's an MRI machine that's portable, if I'm not mistaken. It's one of the, again, I'm not a doctor, but it's an MRI machine that's portable. So that's really cool. MRI machines are usually these really, really big, scary things, but this one's portable, so it's really good. So for example, the Butterfly Network Inc., I believe one of their devices was on a space vehicle that was launched recently, just a few days ago. So that was there. So let's take a look at the chart and see what we're looking at. This chart looks a little bit weird to me. I hope I'm on the right stock, Butterfly Network, BFLY. So the stock was again, this is one of those stocks. It's a little bit, I'm just trying to make sure my auto's on. So it was operating near NAV. I picked up the stock when it was around $16, and I'm still holding it. Full transparency, I averaged down a little bit on the way. So this stock kind of came down a little bit, and then if you see this big spike that happened, you saw that along the way up, these big green candles was when the ARC G fund, which is the genomics fund, or excuse me, Kathy Wood's healthcare fund, started kind of buying into this stock and kind of accumulating shares for this stock. So people started getting hot. So when Kathy Wood buys a SPAC, especially, or a stock, people flock to it because she's got some of the best analysts out there. Again, there's an interview with her on this channel. If you haven't watched it, please go and check it out with Jason Raznick, the big boss of this company here that we're doing, Benzinga. So the stock tends to run up because she's got analysts and brilliant people who are analyzing every single centimeter of these companies to make sure they're a good fit for her fund, because she aims to deliver at least 20% annually. Her funds did 100% last year. Most of her funds did over 100% last year. So so for her, her buying it was a big conviction point for a lot of investors. So people tend to buy in, as you can see with these candles, and she's been accumulating and buying more and more shares. As you can see here, it hit a high of, this is what's confusing me. I don't think this is accurate. This is, it had a high of 124.39. I believe it hit a high of 24.39, not 134, not 124, but that's okay. So if we just kind of just pretend you can cut that right here where it is, we could just, I don't know, maybe did I miss Butterfly Network having a short squeeze? Something is really off with this chart, but that's completely fine. We'll just ignore it and talk about it on its merits. So if you have it on your chart and then the accurate numbers are coming up, you can take a look at, again, the 50, the 200, and the 21 SMA, see where supports or see where it's breaking. For me, this is a company that has a lot of merit based off of DD. We've got brilliant scientists behind it. The Bill and Melinda Gates Foundation has invested. Again, that's another stamp of approval on SPACs and these bio companies where they've got their own teams of analysts coming in. You can see like SPAC success. Again, this is not a SPAC anymore because they've merged, is really based off the team that's behind it and the people and money that's behind it. Let me see. So let me pull up one more if we've got the time. People are talking about PDAC. PDAC is a good one. I'm not in PDAC. I saw PDAC is a clean energy SPAC. I don't remember. If you guys are going to put a SPAC in there, just do me a solid. Tell me who they're merging with so I can kind of light bulb it. I'm not in PDAC anymore. PDAC, unfortunately, is merging with a company. SPACs, you have to be like in a hot sector, merging with a really hot company where it does really well. Even if the company is really good on the books or just has really good merits or everything like that, SPACs are just one of those things where it's got to be like a shiny car, like CCIV or Lucid, to really run and make moves for scalpers. For long-term investors, you don't care. You're investing based off the merits. So PDAC ran up on its, which is Peridot Acquisition Corporation, ran up a lot on rumors before I think the thing was even announced. So it's merging with Li-Cycle. People are telling me here in the chat. I hope that just really quickly. Yes, which is they're the battery recycling company. Okay, perfect. We cycle back to the beginning of the live stream. This is what I call, again, another shovel and bucket play. If they merge with Li-Cycle and everything goes through properly, all of these EV batteries and all these batteries need to be recycled. They will be able to service and answer that problem. Again, there's other companies that are out there that are doing this. I believe ROCH is merging with another recycling company. So take a look out there, see which one's a good fit for you. Just because the company is expensive, if you're doing a long-term investment, again, you dollar cost average in and do all that great stuff. But for example, let's just take a look at Peridot real quick. I was writing the 21 MA, broke that. It looks like people didn't really take too well to the news of who they were merging with, unfortunately, because it wasn't a Lucid. So it broke down, had one good green day, and today it came back down near NAV to a low of $10.31. And this is the day where people who've done their DD and believe in Li-Cycle and want to be a part of this beautiful company that's happening, I'm just calling beautiful just as an example, but who want to be a part of this company and like it, this is the day where you kind of swoop in like a hawk and you kind of take advantage of this money and you kind of be like, all right, I'm going to buy some shares down here because I believe in it and I'm not going to look at it for a long time. Or scalpers, when the SPAC sector gets hot, this could be one of those ones that gets hot again. But again, nothing is guaranteed in the world of SPACs or stocks ever at all. Let me see, BFT and PaySafe. I'm going to avoid that one real quick, Fabian, just because personally I'm not a huge fan of that one, but I can take a look at the chart for you. But PaySafe, in my opinion, I am not too crazy about their books. I'm not too crazy about what they're doing, but we can take a look at the chart, of course, because we're unbiased here. The 21 moving average here, again, it was riding it. It broke it periodically. So this, again, this is another one of those things. This SPAC is a scalper's dream. This is one of those where you kind of look for it to break the 21 MA, you buy, you ride it back up, and you kind of sell it again. That pattern it's been broken these past few days. You can see these doji candles right here, and they've resulted in red. Where we broke the 50 moving average, and right here we tested again. We came down to we came down to a low of $12.97 from a high of, I believe they were in the 20s. Yeah, $19.50 was the high point where this SPAC was. So again, just like every other SPAC that I've discussed, do your DD, do your conviction, see where you can go. Let's do IPOF next. IPOF, again, they have no target. This is another one of those Chamath SPACs, Chamath Palihapitiya, whose name I can say now because I've been practicing. One of those Chamath SPACs that we're kind of waiting on news. It makes sense to me for this SPAC to be low. The SPAC should be at $10, in my opinion. If a SPAC usually goes through a 5-phase life cycle. Phase 1 is IPO, where you're at NAV, you're between $10 and $11. Phase 2 is kind of like a rumor phase where you start hearing rumblings. The SPAC will be between, again, $10 and now $12, $13, depending on who they are, or Lucid, $60. Third phase is your definite agreement, where if it's a really, really good company or a hot company, you start touching the 15, 17 area, and then you get the merger date, which kind of acts as a catalyst, and that's phase 4. And then phase 5 is the ticker change. Ticker change, you usually see a massive sell-off. We saw that this Monday with CHPT, ChargePoint, who merged with SPE, Switchback Energy Group. Again, that's another company that is really, really good. They do EV charging. So why should that stock be undervalued? Again, look at the books, see if it makes sense for you. But again, this stock makes sense to me. This is one that Chamath has a good track record. This is one that you would look at and say, hey, this came to a low of $11. You take a look at it again tomorrow, because we don't know how the market's going to play out tomorrow. It's Friday, so we might see red again. We play this one again. We take a look at this one again, and we see where it is. And if you're a SPAC and you're close to NAV, which is $10, again, yes, you can go under $10 by a few cents. You kind of mitigate your risk with these SPACs. So if you believe in Chamath, you believe in this SPAC. I know IPOD is the smaller one of the three that came out, which was IPOD, E, and F. IPOF is the $1 billion one. I believe IPOD was 300 million, and then 500 million was IPOE. But again, you can look those numbers up for yourself. They're very, very public about what they do. And we can take it. We can take it from there. That's how essentially the pre-target SPACs, the closer to 10, the better. And if it's got a target, make sure it's something that is good. Make sure the books are good. Look for profitability. This is something that a lot of people don't look for when they're merging, when they're looking at SPACs. Profitability is key. When are they going to be going into operation is key. So, for example, take a look at Fisker. Fisker was a great SPAC. I still like Fisker. I still like the car. The car is beautiful. But again, they won't have a car until 2024. What does that mean? That means your money is going to be sitting there from 2020 when the SPAC came out until 2024. See if it makes sense for you. See if you can take it from there and see what it makes sense. So we've got a stock coming in, Qualcomm, which is in the 5G world. If you have an Android phone, if you have an iPhone, you've got a 5G chip in there from Qualcomm, and Qualcomm has been having a bit of a difficult time. Qualcomm has, let me go full screen here. We can see the chart a little bit better here. Again, it's a little small. I'm sorry. Let's go back. How do I get? Go back. Escape. Okay, perfect. Sorry. Still getting used to a lot of these tools here, but I'll master it. Qualcomm started selling off on earnings. Qualcomm, they said, hey, there's a chip shortage. That's known around the world that we are having a chip shortage, which to me that indicates that means there's demand for their chips. People are buying their chips. They just can't provide all the chips that they're providing. Of course, that hurts revenue and your numbers, but that means that it's not saying that people don't want their chips. So for me, I see this as a buying opportunity for a company that's working in 5G. 5G is the future. It's one of the hot sectors that is out there. You've got 5G, AR, VR, 3D printing, all that cool stuff, crypto, blockchain. Crypto and blockchain aren't the same thing, by the way. We'll talk about that another day. But Qualcomm is operating in the 5G world, so take a look at it, see if you like it. Again, here we broke through the 50 and the 21 and the 50, and it's coming down to test the 200 SMA at $123.23. So you take a look at it here. Today we closed at it came down to a low of 126, closed at 130. You watch it tomorrow, see where it is. Of course, as always, support levels. A great video I saw on YouTube it said support levels are made out of wood. They're not steel. They're not titanium. You can break wood. You can break support levels, and that's okay. So a company like this, again, look at the fundamentals, see if it makes sense. To me, they've got chips. They've been delivering for years. They've got huge partners and clients like Apple, Samsung, and all of them. And to me, it's a no-brainer. So if you like it, go out there and take a look and see where you can go. MBIS is coming in. And again, guys, if you haven't, please do me a favor and smash the like button. I promise you it's free. You won't get a bill. You won't get an invoice for smashing the like button. It helps me out personally, and I'll be able to help you out answering some of the questions. We'll talk about there's a lot of stocks coming in right now, but I'll try to talk about all of them as much as I can. I'm having a lot of fun with you guys. MBIS, Microvision. Microvision is working in the I'm quite familiar with these guys a little bit, but a little bit familiar. But this is a company that I kind of check on from time to time. They're working with Lidar technology, and they're working with making very, very tiny Lidar machines. So, for example, the company Laser, which merged with a Gore SPAC, has a very big Lidar machine, and that stock price zoomed up because we saw them taped to Tesla vehicles, even though Tesla hates Lidar. But it looks like they're testing it to turn the Lidar from a hardware component to a software component. That's a discussion for another day. But MVIS, let's take a look at their chart. So MVIS looks like it had support the other day, which was broken, unfortunately, at a low of 1391. That was broken today, so it bounced, and the 3 days after that, it didn't even get that low. So it was looking really good. You had two green candles. It looked like you're out of the woods, but then the market came for you. And it broke support again, unfortunately, and now it's coming down to test that 50 SMA. As you look here, the same rule applies across the board. You pull up your moving averages, you look at your previous lows, you look at your previous highs, you look at your support, your resistance, you see where you are, and then you play along with that, and you take advantage of days like today for a stock that you like long term. So it came down to a low of $12.20. Your 50 SMA is at $10.60. So it's a little bit there. You've got a little bit of room there. It could test it. I'm not saying that it can't, but it could test it. Let me see. I think there might be a gap somewhere in this chart. Gaps, yes. Okay, my hunch was correct. So right here, you have a gap up in the chart. So these past few days have actually been good. So gap ups or gap downs, or when you have a gap in the chart where it shoots up or it shoots down, and that's actually a good thing where you actually had the gap filled. That's a natural and healthy thing that kind of clears the space that's there. So here, as you can see, so I was using Heikin-Ashi candles. Heikin-Ashi candles kind of averages it up and smooths it out, but regular candles, you can see gaps in the chart. So here the chart kind of gapped up, and if you look here with these candles right here, the gap was filled. So we can kind of go back to Heikin-Ashi, and to me that's healthy. To me that means the gap was filled, the support was established. Again, it's one really, really bad red day that doesn't and shouldn't define kind of the market for you. But again, yeah. So I'm going to wrap it up. I'm going to start wrapping it up here. It was a really, really great stream. I want to thank you all so much for watching. If you haven't, smash the like button. Let's show the producers that you guys like what you see, and hopefully I can come back sometime in the future and we can continue to do this more often, because I really, really love doing technical analysis. We've got Neil in the station with us today. How you doing, Neil?
I'm doing great. I didn't mean to pop in. Aaron has to pick up.
I'm happy to have you.
Yeah, I'm glad to be here. I was watching this. I was just admiring how well-rounded you are with fundamentals and technicals. You guys really got to take note of this guy's approach to everything, and then also like how detailed you get with your knowledge of these companies. Super good.
Thank you. I can't hold a candle to you and your technical analysis, though. I was watching your video earlier today with that super rare bull flag, and I was like, how do I wrap my head around this? I was having so much fun learning that, but I was like, I'm gonna have to watch this video like 3 or 4 times. This is such a rare pattern.
Yeah, well, thanks. I think we just became best friends in front of everyone, so that's nice. A beautiful thing. Yeah, Aaron had to pick up his brother from the airport, and he just gave me a call and said, "Hey, cool. Man, can you be a producer?" So that's what I'm here for. But yeah, I think we are at about time, so I gotta pull the hook.
Sure, perfect. Thank you so much for having me. Thank you so much for watching. I know the red market's been a little bit wild, so if anyone has any questions, you can hit me up on Twitter at Ryan Rozbiani. I'll try to help you out as much as I can. Again, not a financial advisor. And Neil, thank you so much for jumping in, and it's always a pleasure to talk to you and be on the Benzinga Network.